Okay, folks, good morning and welcome to Swing Trading Today. This is Bob Desmond, and it is November the 1st, 5 a.m. Eastern Standard Time. Let's get to the pre-market activity. These are going to be 4-hour charts. We're going to go over the pre-market activity, what's going on. Then we're going to segue over and into my most ominous chart of the day. And then we'll talk about a couple of member stock chart requests as well as a couple of positions that we are looking to put on the table. Now, overnight, we saw a breakdown, a big breakdown in the U.S. dollar. The dollar has been in rally mode for several weeks now. We did get a pullback here, and what I thought to be the beginning of a head and shoulders setup, left shoulder, head, right shoulder, but it was negated. We broke out above this resistance level and we continued higher. And really for no other reason than the United States was the least dirty shirt in the bunch, and we were raising rates while the rest of the westernized world continued on with quantitative easing. But I've been saying, watch out for the deficits. Here we had a triangle formation. We broke out, and yesterday I mentioned to members that, let's begin looking at the gold miners and adding more to our position because the dollar looks toppy and we're beginning to see signs of strength in the gold miners, despite the fact that the daily chart is not looking all that good. I have my concerns. I've had it for a few days now, but I started taking a look at the intraday charts yet again, 2-hour, and more importantly, the 4-hour chart, and I said something's brewing here. It appears to be that they're under accumulation, and if the dollar breaks, well then, they're going to move higher, which takes us to, we just made a new session low. This bar right here is the 5 a.m. bar, and it is 5:03, so a new session low this morning on the dollar. Taking a look at gold. All right, so here you have gold, which is pulled back from its highs from the 26th. We began consolidating here on the 31st, of course, which was yesterday. And that's when we began seeing some bottoming action, signs of accumulation. In fact, if you take a look at the chart, 4-hour chart of NUGT, which is the leveraged ETF for the gold miners, we broke out here on this 4-hour chart above resistance. Then we began to pull back and retest the breakout point. And you can see this morning that we're moving higher. Do we open up that high? Who knows? But probably, yeah, we're going to open up higher this morning. So the charts were sending us a signal. And you can see here in RSI, even before we had a breakout on price, which was right here on the 30th, RSI broke out here out of this triangle formation on the 29th, pulled back, retested, and then began putting in higher lows and now higher highs. So interesting stuff. Back to gold. Now, does this mean that gold opens up where we're trading right now? Not necessarily. It's early. We do have resistance above, but the chart is looking pretty good. So we remain bullish on gold. I would not go buying more this morning. We'll look for a pullback, an orderly pullback, and then of course we'll look back to our daily charts to identify where we have the best risk-to-reward entry point, and ideally we're buying more of the gold miners, gold on a breakout on either one, and that goes for silver as well. We have a position in silver we're looking to add. And ideally, in addition to adding more to our gold and gold miners, we want to add more silver as well. And you can see here, we're really shooting up this morning. No real news out there in terms of news that would shock the market. All right, so here's the upper band of resistance. We're beginning to pierce it now. We have a new session high on this 4-hour chart. So we're looking good. We're probably on a short-term basis looking at a 15-minute chart. Overbought here. Yeah, definitely overbought. All right, so we're trading above the third standard deviation Bollinger Band with RSI at over 83 on a 15-minute chart. So to think that we're going to hold this trajectory through to 9:30 a.m. Eastern Standard Time is improbable. We'll probably get a pullback before the market opens. So what would we be looking at as a support level? Well, what I like to do is take my crayon out, and we'll stick with orange. I guess orange is my color of the day. And we'll look for support here on silver, a consolidation, and then perhaps a continuation breakout. Let's take a look. Let's go back to the 4-hour charts. Let's take a look at the markets. All right, so this is the S&P 500. Now, we did get a bit overbought yesterday afternoon on the major averages. We saw that we were long of the TNA, which is a leveraged ETF, putting you long of the Russell 2000. We booked those profits. Now, what we're looking for here is a continuation rally up and through resistance, or a breakdown below this lower band of support. Let's call this our line in the sand for the S&P 500. Do I think that we are going to continue to rally through? Maybe. You know, it's possible. I don't want to use a 4-hour chart to divine which way the markets are going to go. I'll discuss that with members using a daily chart, and if we close positive on the week, a weekly chart as well. But if we break down below this lower band of support, I think it's quite possible, and this lower band of support here is in red, that we pull back and retest recent lows, and that's a good thing. Don't, if you're sitting out there and you're bullish on the market and you're a permabull, just because I'm talking about a pullback in the market after the sell-off here doesn't make me bearish. What I'm looking for is a validation of a bottom. That's it. I have no emotional interest into as to which way the market goes. I'm just going to follow the trend. But right now, the macro trend is down on both a daily and weekly basis. And there's no reason to believe that by using a 4-hour chart, and we're seeing some buying pressure, that the downtrend on a daily and weekly basis has been negated as of yet. Way too early in the game to make that call. So we're consolidating nicely here. We're digesting gains. Perhaps we will break out, perhaps we won't. We're not emotionally involved. And we are staying small with our positions to the long side. That's the S&P. The NASDAQ. Similar to the S&P 500. All right, so we broke out on Wednesday above resistance. Now the key is to hold these gains. And we're beginning to pop our nose above this resistance level here, and perhaps we'll move higher today. But if we fail, if we break down below this lower band of support, big problems. Now, yes, we did pull back off the highs of yesterday. We did consolidate. We did pull back this morning. We came very close to a retest of this breakout point here in green. So that's a good thing. But if you see a breakdown below, what was the low of this bar? 69.51 on the E-minis. That's a problem. And we'll probably get some selling pressure on this index. What else do we need to go over here? Let's take a look at yields. Always have to take a look at yields. All right, so this is actually the 10-year Treasury note. So think the inverse when you're looking at yields. So right now, the 10-year Treasury note is pulling back. And it's been pulling back ever since last Friday. Now, what does that mean? It means that yields are moving higher. And they are moving higher yet again this morning. And that is not bullish for the markets. So this line in red is acting as resistance, short-term resistance, and this line in green is acting as short-term support. If this breaks, that means that yields are moving higher. Yet again, it'll be a continuation breakout on the day, and day over day, meaning the trend on a daily basis will continue to be to the upside, and that will put pressure in all probability on stocks. Remember that we have the jobs data coming out tomorrow as well. Let's segue over and into the chart of the day, considering the fact it's a monthly chart and it is November the 1st. Let's get to it. Now, what you're looking at here is the yield curve monthly chart, and I'm going to be doing a video on monthly charts because it's always good to identify where you've been the prior month to indicate where you may go in the coming month. So if you want that commentary, you need to be on our email list. Go to the website, enter your email address. We hate spam too. You'll not be spammed. So the yield curve is simply a measure of the spread between, in this case, the 2-year Treasury yield, not the note, but the yield versus the 10-year Treasury yield. Simple as that. And as the spreads narrow, it's an indicator of the possibility of recession. And we're not there yet, but once we go down to 0 and then invert like we did back here, here, it's a sign of recession, or it has indicated recession in the past, and it's not good. So we've spent the past 3 months holding the support level at 0.2. Last month we rallied. We even put in a new month-over-month high, but we sold off. And while, yes, we closed up on the month, this is not a bullish candlestick. You do not buy this type of price action despite the fact that it was up. Why? It's because it reversed. And you saw topping action, which would imply that what we're going to get is a continuation move lower or a narrowing of the yield curve. And again, it's an indicator. Once we invert and go negative, meaning you're getting paid more to hold short-term bonds versus longer-dated bonds. That's the inversion of the yield curve, and it's not good. Let's get to the member stock chart request for gold members, and we'll mix in here some stocks that we're watching as well. LABU. This is a Direxion leveraged ETF for the biotech sector, not for the faint of heart. You don't want the volatility? Take a look at the BIB. RSI hooking up. We have higher lows getting put in. I'm not loving the stochastics. They appear to be rolling over below 20. Now, they could hook up, but I was reluctant to go buying a position yesterday. And when I was looking at the chart, I took a quick look, and we were up on the session, and we did close up, to be fair. But when I look at a candlestick like this, when we sold off the highs of the day, to me, it might as well have been down. We sold off the highs of the day, a filled candlestick, a sign of indecision. So I would buy the breakout on the LABU. Or if we got a pullback and then reverse to close back above this upper band of resistance and appeared ready to close there at the end of the day, then I'd be ready to perhaps open up a small position. I think we could rally up to this upper band of resistance here. Good volume. MACD like a coiled spring. LABU looking good. Google. So as a trade, I'm beginning to warm up to Google a little bit. I have not been a fan. We have been bearish on Google since August, and it was the right call. Take a look at any of my videos about the FANG names. I have been bearish on Facebook and Google in particular. And longer term, I remain bearish. But short term, we have rallied off the lows. We did rally up and into resistance. Would I buy here? No, I need to get a breakout. All I'm seeing right now is a bunch of sellers who bought back here thinking, oh my God, it's Google. How could it go down any further? Those buyers who were delusional, who bought back here, they want their money back. They sat through this sell-off and things got real, really fast for them. All stocks are speculative. So I'm looking for a breakout. We may possibly open up a long position on that breakout or on a pullback and a double bottom setup. Members, more to come on Google. Stokes rising, looking good. I would not be a buyer as of yet now. Too many sellers here. Overhead supply. DPST, the regional bank ETF. We stopped out a while ago here, and thank God that we did. I think that we're going to pull back here on the DPST. We'll be looking for a higher low, and the DPST is the regional bank ETF, if I didn't say that. We'll be looking for a higher low or a double bottom setup on this ETF. Great volume, higher lows, and a breakout on Ultimate Oscillator. Good stuff. Stokes rising, beginning to break out. Also good stuff. But I think we need a pullback here because what we saw yesterday were sellers moving in to take advantage of liquidity. This was not a pretty close. Emerging markets. The dollar is pulling back. I've been talking about the emerging markets with members for a couple of days now, and I mentioned that we got a breakout on a daily basis on RSI. Maybe I'll play that clip from Market Wrap on Tuesday on the weekend commentary. But we spoke about the breakout on RSI. We had put in higher lows. We had broken out. We were beginning to break out on Stokes, but we weren't breaking out on price. And so, you know what? Let's see whether or not we could break out here. I'm concerned about the dollar still strong. The EDC and the dollar tend to trade inversely of each other. Sure enough, yesterday, even though the dollar was up early on, we still gapped up. The dollar reversed on the day, which allowed the EDC to keep its bid. It pulled off the highs of the day. I think we're going to retest here the breakout point, so we may be getting long very shortly of the EDC. Canopy growth, another one where, thank God, we stopped out. We broke down below support. We stopped out. That was up in the 40s. Would I be a buyer now? No. We have resistance right here at $38 per share. All these non-believers who couldn't believe, oh, I can't believe the weed stocks are breaking down. Aren't they the new dot-com stocks of the 1990s? Sure, they could be. I think the canopy growth longer term will probably go a lot higher. But remember, these are speculative plays. And when you get a sell-off in the market, you get margin calls. And for those traders out there who are new to the market or even who have been trading for 5, 10 years even, they haven't really seen a massive correction yet in this market and have no idea what a margin call means or what it could do to the overall market. And these stocks demand, if they are marginable in fact, they require far more cash to support that margin call. If you're holding this position, it's your only position, then what would be required were you holding an S&P 500 stock? It all goes to risk. These brokerages are not stupid. They are modeling. And when you're in the middle of a sell-off and you're on margin, these brokerages will raise the margin requirements in the middle of the sell-off. They don't care. They're going to protect their own butts. So keep that in mind. So while I like canopy growth, I want to buy canopy growth. I'm not ready yet. I think this is a dead cat bounce. We're looking for a pullback. Can it move higher today? Absolutely it can. For all I know, it can go up to $100 per share today. We do not have a crystal ball. All we're doing is using charts to identify the probabilities and the possibilities. That is it. We are playing the odds. And the odds is that while, yes, we'll probably move up higher today, we will likely get a pullback in the coming days and a retest of recent lows. And that's a good thing. I hope it does. And I'll be a buyer. I'll be the first one to step in and buy. Up volume, very weak. And it dropped off yesterday, in fact. And big selling pressure. And that is it for today, folks. Members, we will talk this evening. Everybody have a profitable trading day. If you're not a follower of me on YouTube and you get any value out of these videos, please follow me there. And also, if you want the month ahead commentary for the month of October, which will be produced in November, enter your email address on the website. We'll send it out to you. You can enter it anywhere. One of those annoying pop-up boxes or anywhere on the website. Again, everybody have a profitable trading day and be safe out there. Be well.